In an interesting twist of events, the Shiba Inu ecosystem is currently in the midst of a remarkable surge in on-chain transactions, with a particular spotlight on the BONE token. Recent data analysis has unveiled an astonishing 898% increase in large transactions, each valued at $100,000 or more, involving the BONE token. A esteemed blockchain data provider Into the Block has shared that substantial BONE transactions have surged, propelling the token's value by a staggering $3.27 million. This unprecedented upswing equates to approximately 4.6 million BONE tokens, painting a vivid picture of the cryptocurrency's soaring popularity. Source: Into the Block. In the wake of this surge, the daily volume of large transactions has skyrocketed to an impressive 5.17 million BONE tokens, corresponding to a colossal $3.63 million. Shibarium 2. Intriguingly, simultaneous with the surge in on-chain activity, the BONE token has also witnessed increased transfer activity within Shibarium. The blockchain project led by the SHIB team has embraced BONE as the primary payment method for gas on the network and the staking token for validators. Source: Shibariumscan. According to latest data from Shibariumscan, new transfers of the BONE token have experienced a remarkable 73.6% increase within the past 24 hours, totaling an impressive 863 transfers. The precise catalyst for this phenomenal surge remains undisclosed. However, the undeniable fact is that the BONE token is currently undergoing an extraordinary surge in both on-chain transactions among major investors and its role within Shibarium. An Elon Musk impersonator claims X plans to use a payment system with cryptographic rails. According to the impersonator, Doge isn't ready, and Bitcoin cannot scale. A voice note claimed XRP is the ideal solution for payments on X. In X, formerly Twitter, user Max Walker Williams posted that Elon Musk, the platform's CEO, plans to introduce a payment system with cryptographic rails. In the post, the user referred to a recorded X Spaces session where a voice note that sounded like Musk made the claims but did not clarify which particular cryptocurrency the platform would adopt. In a voice note, the supposed social media platform's owner hinted that Doge and Bitcoin, in their current state, do not pass as some of the cryptos that would work for payment purposes on X. It also stated that Doge isn't ready for such an implementation, while Bitcoin cannot scale. The assumed X owner thought Bitcoin's Lightning Network was a joke. However, he stated that XRP may be a leading solution for what his company wants to achieve. The shared voice note presented a bullish perspective for XRP and indirectly praised it as a ready payment solution. A respondent to the post thought that it would be an amazing development if Musk planned to implement XRP as a payment rail on X. The respondent, XRPamisai, considered the possibility of a branding, XRP on X, that would work well for the pair if they worked together. XRPamisai noted that both companies are San Francisco-based, have legal clarity, and X is Musk's favorite letter. However, he expressed his doubts about the authenticity of the information, noting that there would have been a flurry in the XRP community if Musk truly made the pronouncement. Several other respondents commenting on the post confirmed that the information was false and that the voice note was from a Musk impersonator on the X Spaces. Also, following the XRP community, no such information was discussed, as the voice note was dated almost 1 week ago. It did not also impact XRP's price, considering how much influence Musk's statements have had on the crypto market in the past. XRP traded for $0.6232 at the time of writing, following a steady rally that has seen the altcoin gain 32% since October 19th. Prominent cryptocurrency attorney John Deaton has offered insights into the United States Securities and Exchange Commission, SEC, versus Ripple lawsuit. He contends that a settlement of $20 million or less would constitute a significant legal triumph for the company. In a recent post on X, formerly Twitter, Deaton strongly refuted the idea that the lawsuit's result was an even 50-50 outcome for the SEC, claiming that it's closer to a 90-10 advantage in favor of Ripple. Deaton's remarks were prompted by a post from Stuart Aldrody, Ripple's chief legal officer, highlighting another legal setback for the SEC. Deaton's viewpoint resonates with the sentiment in the cryptocurrency community, which generally views the suggested $20 million settlement as a positive resolution for Ripple. This assessment considers the potential consequences of the XRP lawsuit and the broader regulatory environment for digital currencies. Stuart Alderody's post further adds to the storyline, pointing out that the SEC faced another defeat this week, continuing a series of setbacks. According to Aldrody, in the case of the SEC versus Goville, the U.S. Court of Appeals for the Second Circuit ruled that the SEC cannot request a substantial disgorgement award without first demonstrating actual financial harm to investors. In essence, it implies that if there's no harm, there's no penalty. In December 2020, the SEC initiated legal action against Ripple Labs, accusing the firm of conducting an unregistered securities offering by selling XRP, its native cryptocurrency. Ultimately, a precedent was established when Judge Annalisa Torres determined that the asset was not a security when traded on the secondary market. Additionally, the case underwent significant changes as the charges against Ripple executives were reduced. Meanwhile, Taurus has recently approved an order regarding the SEC and Ripple's joint request to propose a briefing schedule to address institutional sales of XRP. This relates to the segment of the XRP lawsuit in which the company was determined to have breached securities laws. Taurus instructed the parties to provide a joint briefing schedule no later than November 9th. A look into the Bitcoin price action shows a consolidation under the $35,000 support level has resumed, but the majority of holders are holding steady. On-chain data has revealed that the number of Bitcoin unmoved in a 3-month time frame has reached a record high of 88.5%. The upside potential remains huge despite the ongoing consolidation, as the top crypto is still up by 26% since the beginning of October. BTC price drops below $35,000 but investor sentiment remains bullish. Bitcoin managed to push above $35,000 a few times this week, propelling millions of BTC wallets into profitability. The crypto has since dropped below $35,000, but long-term investors remain optimistic, according to on-chain analytics of Bitcoin movement. One particular metric that speaks a lot about the current Bitcoin cycle is Glassnode's HODL waves. HODL waves change color based on their age in wallets. Bitcoins start at red immediately after they're transferred into wallets and gradually transition to purple as they continue to remain unmoved. This metric, which tracks the age of Bitcoins on the move and on wallets, has shown almost 90% of BTC total supply has remained idle in the past 3 months. A similar metric from Into the Block has shown retail traders joining the long-term holder bandwagon as investors start to hold onto their assets in the prospect of a BTC spot ETF approval by the SEC. Into the Block's holding metric puts the number of addresses holding Bitcoin for more than 1 year at an all-time high of 34 million addresses. Investors anticipate SEC approval of spot Bitcoin ETFs. Several factors have contributed to the increase in long-term confidence of Bitcoin investors, one of which is the commencement of a spot ETF trading in the US. The industry expects the SEC's approval of spot Bitcoin ETFs to ignite the next bullish run for the price of Bitcoin. A top executive at Valkyrie Investments is very confident these ETF applications will be approved by the end of the month. However, Singapore-based QCP Capital attributed the recent spike in Bitcoin to macro forces like the drop in US bond yields, not the excitement around spot ETFs. Low bond yields force investors to look into higher yield investments like BTC. Overall, Bitcoin looks to remain in a consolidation phase until buyers step back in or some catalyst drives the next rally. The last time Bitcoin supply reached 88% for this metric was during a consolidation in late 2022, where bears got the better and Bitcoin dipped below $20,000. A continued consolidation could see Bitcoin follow this pattern, breaking below its current range to reach $30,000.